Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but anyone can get the same premium wireless for $15 a month plan that I've been enjoying. It's not just for celebrities. So do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
Security! There's some strange man in the studio. Oh, it's you. I kind of forgot what you look like after a week.
Yeah, I'm going to get a bad time for skipping out last week, playing a little hooky. So, yeah, it was worth it, by the way. It was worth it.
There he is,
I'll take it
Tom's
for that
back.
one. Yeah, it was fun.
I know you all missed him desperately. Now he's back.
Get over it.
I'm Don. That's Tom. And this is Talking Real Money, the really important radio show. Why is it really important? Tom, why is it really important?
I have no idea. Fills a 2-hour block between two people that do a great program. I guess that's
fills a bunch of space.
Those other shows that
we fill time.
Yeah. So
no, we
how's that?
don't.
Oh, okay.
We
Yes.
come in here every Saturday, or if you're listening to KVI or the podcast, whatever day you're listening, Sunday or whatever. We come in here to do something very important. And that is to help you build the wealth that you have to get to retirement primarily. We can help you build the wealth you need for other things too, but primarily to get to retirement comfortably and securely so that you don't have to sweat it.
That's what it is?
Isn't that it? Yeah.
Okay. I feel better now, and thank you for laying that out there.
I think it's a really, really noble thing.
Just going to say we answer your questions about money.
Yeah, we do that too, but in pursuit of that greater goal. It's that greater goal.
You're really enthusiastic today. I like that.
Well, you were at a soccer game.
Yeah.
Goal!
There you go. Yeah, I need a little more. I only respond after about 40 seconds of goal.
So let me give you the numbers so you can call us and ask us those really important questions to help you get ahead in life, to understand what you're doing, to avoid being ripped off. And boy, do I want to continue to talk about what people do to you to destroy your wealth. They make me mad. 877-397-5666 is our phone number. That's 877-397-5666. It is really easy to call. And because we are heading into the glorious season, that's what I've decided.
We call it the non-rainy season.
Yeah, but it's when it's glorious. Summers in Seattle are just spring, late
yesterday,
spring, summer.
Today, yesterday
it's
one
the
of those
glorious
days.
season,
and
that's
true.
Therefore, what's the last thing you want to do during the glorious season?
Woman's attention turns to things other than finance.
Other than finance, exactly.
They don't get up going, can't wait to talk about my portfolio.
So I want to bribe you.
Oh, okay.
It's not a financial bribe, but it's a bribe. Well, it is in a way. It's a bribe to help your financial future.
That's
the bribe is the only. I'm surprised we don't have more subscribers. It's the only one. The only.
We have as many subscribers as Newsweek, I think, or something now.
Subscribers, yeah. Print subscribers,
okay, yeah.
Sorry.
So what's wrong with that? That's good.
Or I'm sorry, a tissue. Kleenex is a registered trademark of Kimberly-Clark.
Please don't use that. Yes. That'd be great.
So we're gonna give you a free year, a free charter subscription to Real Investing Journal. We're gonna give you $15 off a $15 subscription. So by even modern math, even the new math, that's free.
Okay, so it just took you 5 minutes to say the show's about money. If you call today, you get a free magazine for a year, and that took you 5 minutes.
You take over.
That's why you can do a 2-hour show better than I can. Because I would just be like, "That's it, okay,
right.
All right." But now what?
My wife's always going, "I cannot argue with a talk show host."
Yeah, you'll never win.
I cannot argue.
Oh, we'll
with a
talk
talk
about
show
that
host.
because it's in my family. It's graduation weekend. My nephews are having a lot of the family in town, and I got into it. Am I a guy looking for an argument? Don't answer that. Don't answer that. Don't
Every flipping time I turn around, you're looking for an argument. Why? Did somebody in your family suggest that might be true?
No, someone not in my immediate family, but in kind of the extended family said I was wrong about investing. And so that led to, kind of a discussion.
That is an argument you've got to have, though.
We'll talk about it
for that argument.
No,
I live for it.
Yeah, so we'll spend a little time on that.
Oh no,
otherwise,
I'm dying to find out what you said.
Yeah.
How long did the argument go on? Still going, isn't it?
Yeah, I think I'll see that person again tonight because it's kind of like a weekend thing.
Now, this person.
Yeah.
I don't know. No names. Don't name names.
No, gosh, no.
Is this person in the financial business?
No.
Okay. Do they have a degree in finance or economics?
Nope.
So they just have a warped opinion.
Well,
apparently.
I mean, we can get. I mean, there. I said
Well,
that
you got 30 seconds
to
tease it.
But the tease is this: is the what we believe about money and the way we describe it arrogant?
Oh yes, absolutely.
Okay, and then that was the argument.
No. I have no. But arrogance when you're right.
There you go. It always you're okay then, right?
It's more like confidence than arrogant. Confidence. 877-397-5666.
Tom and Don are talking real money.
Quick break. In addition to our Talking Real Money podcast, we have a few other tools to help you gain a better understanding of the concept of real investing. Of course, there's Real Investing Journal. That's offered in both a free online version and in an inexpensive printed magazine. Explore both those options at realinvestingjournal.com, realinvestingjournal.com. Then we teach classes. We offer most of our live classes in the Seattle area because that's where most of our offices are, but most of you live elsewhere. That's why we're now offering the same classes that Tom and I taught at Retire Meet online right now, free at talkingrealmoney.com under the video link. Just go to talkingrealmoney.com and then click on the video link. You'll see them right there. Finally, we also manage the wealth or the budding wealth of hundreds of folks like you through our fee-only 100% fiduciary investment advisory firm, Vestory. You'll find our approach is consistent with the message we've been sharing for decades. We always put our clients' needs first. Our fees are among the lowest of any non-robo advisor, and constant education is one of our core values. Visit Vestory.com for more information on our firm and to take our free no-obligation risk quiz to better understand the level of investment volatility you can tolerate. That's Vestory.com, Vestory.com.
For your real life and real future, Tom and Don are talking real money.
Only because it's really, really important. And let me just explain something to you. A free 1-year subscription to Real Investing Journal awaits you for your participation in today's Program del Grande.
All you have to do is ask a question about your money.
Yeah, just ask a question.
Okay.
So give us a call, 877-397-5666. Beware of experts claiming to be able to beat the market. One of those experts is a guy by the name of Stephen A. Cohen.
Oh, he's more than an expert. Come on.
He's the king of the hedge funds.
He is. He ran a thing
Stephen,
called SAC
really
Capital.
Well.
Oh, he took nothing to, I think he still has $11 billion.
Of his own
his
own money.
The downside
used to be his clients' money.
Yeah, the downside, of course, is that, some of the people that work for him went to prison. One's still there. I think Martoma's still there. He had like an 8-year sentence.
Yep, but he wouldn't rat on Stephen.
No, he wouldn't. He wouldn't let that. Stephen Cohen runs a hedge fund, and he got a suspension from the SEC that is just about to end. I love that.
Well, no, even better.
Come on.
His company, SAC Capital, pleaded guilty to felonies. His company pleaded guilty. He didn't. I don't know how that works, how the guy who heads the company isn't in trouble, but the company. And didn't they write about $2 billion in checks?
It was some large number. But the bottom line is the suspension is ending, and he's coming back. Oh. He says he's going to raise... They're going to have $20 billion. So my point was, if you really want to give him money, read Black Edge first. See if you read the book, see if it's really being done on the straight and narrow.
While it's not the best writing ever.
Oh, it's a good.
It's a good read.
Yeah, it's a good read.
It's a good read. The book Black Edge is really the story of Stephen Cohen. If you don't like to read, if you're maybe the President of the United States.
There you go. You're hitting everybody today. I'll tell you what.
If you don't like to read, but you want to kind of see what Stephen Cohen's like.
That was the great Don McDonald, by the way. It wasn't me. So.
Watch Billions. Watch Billions on Showtime.
Okay, that's a good point. Yeah, if you don't want to read, you could watch.
If you don't want to read, watch Billions.
That's true.
It's sort of loosely based on. It's a composite of many of the hedge funders out there. And bear in mind, these guys, what they get paid is just obscene.
Yeah.
They get 2% per year on average.
of
That's
the assets they manage for you.
Of the
percentage-wise,
billions
yeah,
and in a good year, they get 20% of the profits. What shocked me is there's a radio host, use the term loosely, put air quotes around it, on a small, unrated Seattle station.
Mm-hmm.
There's a host there. Get this guy charges, you weren't here last week.
No, I heard, but you and I talked about it afterwards.
3% and 20% of profit. 3 and 20.
Great racket if you can get it. He doesn't manage much money, I believe. We looked at
No, it's around $20 million.
Small amount, but still.
At 3 and 20, you can make a living.
It adds up.
And what was funny is that I went in and looked up his track record, and he claimed he was such a brilliant stock picker, timer, whatever it is he is. I don't know what he is. But his performance was below that of the S&P 500.
No.
Yes.
No.
Yes.
But you got the opportunity to pay 3%.
Well,
by the way,
the guy who makes you feel special.
And we should mention, by the way, that in our world, you should never pay more than 1%. 3% is
I mean, I could
kind
see
of a lot of money.
Stretching to
I want to make sure we had a lot of callers, but I want to make sure that we get to this piece that was just on the newsletter that I read that talks about how if you're paying a lot in fees, even a small difference in fees over a long period of time makes a huge difference to your retirement. Massive.
That's the Bogle doctrine. That's John
Bogle's
doctrine.
And I've got some numbers that will surprise you, I think, about that.
In fact, there was a great Frontline piece on PBS that talked in large part about how big a difference fees make in your return. A huge difference. 877-397-5666. The bribe is in effect. Get a free year of Real Investing Journal for being a part of the show. And we'd love to help you enjoy a better future.
Tom and Don are talking real money.
We hope you're enjoying one of the more unique podcasts out there, but we want to remind you that there are other tools we offer to help you get educated about what we call real investing. We publish Real Investing Journal both as a free online version and in an inexpensive printed magazine. You can check those out at realinvestingjournal.com. Then we offer classes, most of which are in the Seattle area, but now we've got a couple of the classes that we taught at Retire Meet online for free at talkingrealmoney.com under the video link. Just go to talkingrealmoney.com, click on the video link. And finally, we rarely mention it, but we also manage wealth for hundreds of folks and well over $250,000 through our fee-only 100% fiduciary investment advisory firm, Vestory. We manage money just as we talk about it. We always put our clients first. Our fees are low, and we educate you on a regular basis. Go to Vestory.com to learn more, and you can take our free no-obligation risk quiz to understand the level of investment volatility you can tolerate. That's Vestory.com, Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
You know what's funny is that the concept of investing in whole life is one of the oldest investing concepts for individuals in this country. It was one of the original ways that the middle class invested before mutual funds were hot. And the things, they've rebranded it as infinite banking. The other name I forgot was Be Your Own Banker.
That was the because that every once a year somebody calls us about you be your own banker. Nah. Gimmick.
It's just life insurance. Yeah. That's all it is. And when you take money out, you're borrowing it back. And by the way, you pay interest back.
Doesn't surprise me. Yeah.
And if the interest, you can end up. Plus, there are huge surrender fees.
I think you're getting. I think at the end of the day, to make it simple, you want insurance, go buy term insurance. You want to invest, go invest.
The reason the insurance industry pushes whole life, though, is because the commissions are huge. Yeah, well, okay. Term life commissions are minuscule.
Sorry.
I know. It's because they're not making money. This is what bothers me about this business. If it's not about the salesperson, then it's not right somehow. Huh?
Yeah.
It's backward,
I think. Your
money,
money, not theirs. Keep that in mind
your
always.
Money. 877-397-5666. That's our phone number. And, Eric, you get to borrow it for a minute, or the line anyway. Yeah. Welcome to Talking Real Money.
Hey, Eric, how can we help you?
Well, thanks, guys. I appreciate you taking my call. Hey, I'm going to piggyback off of what you guys were just talking about insurance-wise. I am wondering, I wanted to talk about long-term care insurance and whether I should be getting that in a life insurance vehicle or just going through a separate company for that. long-term care insurance.
Yeah,
and if I do get it in a life insurance vehicle, is it the same as that whole life that you're talking about?
Well, there's all kinds of hybrids out there when it comes to long-term care, and it's not. Yes, you could buy a traditional policy. You could buy a hybrid policy
that includes a
well.
life
But here's the thing:
deal.
a lot of this depends on kind of your health, your age, your financial situation. So it's not as simple as just checking a box one way or the other. I've seen good products in all of these areas. Some people, frankly, just cannot buy a traditional policy because their health doesn't allow for it. So the industry has said, okay, we still want to underwrite you. Here's how we can do it. So there's policies where you put the money in, a chunk of money in, and that pays the premium. So there's all kinds of ways to do this.
But there are often on those kinds of policies huge limitations on your benefits. They're capped by a certain amount over what you put in because the insurance company, believe me, they're not building these for your benefit. They're building these for their benefit. They're playing the numbers, and they're saying, okay, we're not going to take too much. One of the biggest problems with long-term care insurance is that the insurance companies underestimated the risks
hugely
that they would be taking.
The industry has changed dramatically in the last decade.
The living daylights out of them.
Yeah. So you saw people getting out of this industry. You saw premiums go up dramatically, and you saw a lot of these hybrid products where people said, hey, let's do this so people can still buy this. And so the answer is, I don't know.
Well, let me ask
go ahead.
Let me ask Eric a question. Eric, why are you considering long-term care insurance? That really should be the first question anyone asks you, and salespeople will never ask that.
To protect my assets in retirement, and I'm seeing more and more retirees losing their assets due to health issues.
Spending down the money that you've saved to take care of yourself is what you're saying. I don't want to have to spend the money that I've saved to take care of my
About how big
costs.
are your assets?
I'm hoping, hopefully, in the next couple of years to be at $500,000.
Okay. You're
And
40 some odd years old?
And I'm 47. 47.
Well, I got to tell you, a policy should be dirt cheap for you right now.
You know what? I wouldn't even, if it was my money, I probably wouldn't start shopping until I was 50.
And I've been told that.
Yeah.
And that was going to be another question.
I think. Do you have for
too young to?
Yeah. Do you have, for example, are you employed? Do you have disability insurance?
I do. I have.
Okay, because that's the one where people, I'll never get. Oh yeah, there's the chances of you getting hurt and not being able to go to work are greater. So
I am I believe that we as a nation are overinsured.
We have this discussion from time to time.
That we spend too much of our wealth. We give too much of our wealth to the insurance industry. And really, all we're doing is gambling. We're gambling with them.
And
but
guess
here's
what?
the thing:
odds
we're
are on
gambling
their side because they spend a
the
lot
odds
of time.
are on. They're the house.
Yeah,
they're the
right.
house.
That's
And we're betting on bad stuff.
Yeah. That's true.
Okay, I'm going to bet my money that something horrible happens to me.
But you're transferring the risk in a way, too. You're saying you guys take the risk. Yeah, okay, I get it. The bet's on your side of the table, but I don't want to. I see both sides of that. I do.
Oh, yeah.
That's
all
fair.
right, Eric, there you go. You have it.
Yep.
That's the scoop. Thanks for the call.
We got another call
877-397-5666 is our phone number. And, Mary, it's your turn.
Hey, Mary.
Hi, how are you?
We're having fun. How can we help you today?
So I have an account review with my financial advisor coming up in the next couple of weeks, and I wondered if you could give me some guidelines about what kinds of things I should talk to her about. I have 51 months until I retire.
Yay.
All right, here's the first thing I want you to do. I want you to go to one of these stores in the mall that where they make up the caps. They make up these little cute hats.
You're not going to let this go.
And I want you to have one hat with fiduciary written on it, and the other hat with merely suitable.
Okay, now
and then I want your advisor tell them to put one of those hats on when they're talking to you, whether they're fiduciary.
Mary, who does your advisor work for? Who does she work for?
My advisor works for New York Life.
Okay.
And I do understand everything going on with the fiduciary, and I am on board with that.
Okay, so no, I mean, I would better than the hat thing because it's kind of silly in a lot of ways.
I can already answer the question. It's New York Life.
Yeah, I know. So, but
they're not a fiduciary.
No, they're not. So if you accept that, then if you say that's okay, then I would want to know down to the nickel how much am I paying in fees?
Commissions.
Yep. How am I paying that fee? Am I paying when I buy something, which is likely? In other words, because that helps establish how this relationship looks. And then I guess the other one I would want to know is, what is the strategy underlying the investment part of your relationship with New York Life? Don's he's jumping up and down over here. All right, get the bid out of there. Get chomping.
And I would love for you to go to talkingrealmoney.com and scroll down the page, and in the right column there, you'll see a form to download. It says download financial advisor interview form.
Oh, that's good. Yeah, that'd be a good place to start.
That is it's a 2-page form, really easy to fill out. It has the name of the firm. It says, what are your fees? Are you fee only? What are your rates? And then it has a little thing at the bottom that says, are you a fiduciary?
We already know the answer to that, because I don't even know how they're going to operate.
It's very helpful because it has boxes they can check. Do you use active mutual funds? Do you use passive mutual funds? Do you sell annuities and insurance, individual stocks? All of those things. It's all the things that we as individual investors are going to forget to ask once we get there.
Yeah.
Well, I do have a very long-term relationship with this individual, and I also have investments with Fidelity as well.
Okay, as I told the previous caller, though, no matter what your relationship is with someone, this is not a friendship issue anymore. This is your life. You are actually putting your life, your long-term existence, into the hands of another human being, and you can't do that based just on friendship. There has to be a stronger basis of true transparency and absolute trust. And that's what these forms will do, help you gain that trust or build it.
Tom and Don are talking real money.
Quick break. In addition to our Talking Real Money podcast, we have a few other tools to help you gain a better understanding of the concept of real investing. Of course, there's Real Investing Journal. That's offered in both a free online version and in an inexpensive printed magazine. Explore both those options at realinvestingjournal.com, realinvestingjournal.com. Then we teach classes. We offer most of our live classes in the Seattle area because that's where most of our offices are, but most of you live elsewhere. That's why we're now offering the same classes that Tom and I taught at Retire Meet online right now, free at talkingrealmoney.com under the video link. Just go to talkingrealmoney.com and then click on the video link. You'll see them right there. Finally, we also manage the wealth, or the budding wealth, of hundreds of folks like you through our fee-only 100% fiduciary investment advisory firm, Vestory. You'll find our approach is consistent with the message we've been sharing for decades. We always put our clients' needs first. Our fees are among the lowest of any non-robo advisor, and constant education is one of our core values. Visit Vestory.com for more information on our firm and to take our free no-obligation risk quiz to better understand the level of investment volatility you can tolerate. That's Vestory.com, Vestory.com.
For your real life and real future, Tom and Don are talking real money.
And if you don't have the job you want that you need to contribute to your Roth, and you're interested in the investing business, you'd like to get started in this business, or you've got some experience in this business, and you're looking for a firm that's actually going to tell people the truth, you'll have to work for a living. I'm sorry, that's part of the deal, but we're looking for client services people at Vestory because Vestory is growing. Just go to Vestory.com, and it's right there at the bottom of the page. Go to Vestory.com, Vestory.com.